it's good news. I would say markets have, generally viewed U.S. as being in a very strong trade position. So I think these trade deals are sort of reinforcing that. And overall, I think it's, quite good for markets because, these are improving the trades return for U.S. businesses, making them a lot more competitive. And of course, I think it's just, again, highlighting that there's reasons for businesses to be optimistic and consumers as well, and why we still have a bull market.
Rick, is this development enough positive news to sort of reignite a move higher and steeper in the yield curve?
Well, I don't know if that alone, the trade deal alone, is going to give a lot more horsepower to a steepening curve, but it certainly isn't going to give more horsepower to a flattening one, Wilf. The fixed income markets actually took this in stride. If you were to look at a very detailed intraday chart over the last 20 sessions, I don't know that you'd be able to pick this particular event out. Yes, the long end rates have been mostly higher today, but we're only talking one, at the most, 2 basis points, where the rest of the curve is unchanged. From the standpoint of the Treasury complex, there's a lot of cross signals going on with central banks and accommodation and how much total stimulus is still in the globe from all the central banks' balance sheets viewed in their entirety. But I do think that the equity markets probably had much of this priced in. Investors have been much more about actions than hyperbole, but today is evidence that even something that's counted on by investors could get a second look to the upside once we have more detail.
Tom, what about the beaten down autos? Are they a buy on this beyond just some relief today?
At some point, I think they're going to, be a really interesting sector. I think autos are a classic example of a value sector, one where they have, pretty big balance sheet. And the markets have really been kind of narrow this year. They've really favored growth stocks. This year, 10 stocks are accounting for 55% of the points gains. I think next year's a year where there's much broader participation. And stocks like the autos actually are going to benefit from higher rates because, as you know, higher rates means pension liabilities shrink. So there's sort of some double whammies that are going to serve as tailwinds for autos next year.